This is Nightly Business Report with Bill Griffith and Sue Herrera.
Economic milestone. There are more job openings than there are available workers, and that's never happened before.
What's brewing? Starbucks will start its next chapter without the man who turned it into a household name, and at a time when the company faces a number of challenges.
Death of an icon. Kate Spade turned a small handbag company into a global brand. Today, she was found dead in her Manhattan apartment. Those stories and more tonight on Nightly Business Report for Tuesday, June 5th.
And we do bid you good evening, everybody. During an otherwise quiet day on Wall Street, the NASDAQ Composite closed at a record, and we'll have more on that coming up. But we begin tonight with a significant moment in our economic history. We learned today that right now there are more available jobs than there are people out of work. That is something the American economy has never experienced before. The Labor Department's latest report shows that there were a record 6.7 million job openings in April, while the number of available workers was 6.4 million. That is the first time that has happened since the government began tracking job openings back in 2000. Now, to put this in perspective, when the Great Recession ended 9 years ago this month, there were about 6 unemployed people for every job opening at that time. And it's just the latest sign that the U.S. is facing an historically tight labor market.
And Bill, those positive numbers on the jobs market come alongside some sobering news on the state of Social Security. Costs for that program will exceed its income this year for the first time since 1982, forcing the program to dip into its trust fund to cover benefits. It is estimated that those reserves will be depleted by the year 2034, and Social Security will no longer be able to send full benefits. The report also said that Medicare's hospital insurance fund will be depleted in 2026. That is 3 years earlier than anticipated.
Meanwhile, a new report says leading CEOs are a little less optimistic than they have been. According to the latest survey from the Business Roundtable, many are concerned about the direction of trade policy right now. Kayla Tausche has details for us tonight from Washington.
For the first time since Donald Trump was elected president, a quarterly reading of confidence among CEOs has fallen. The survey conducted by the Business Roundtable showed that expectations for the next 6 months for hiring, capital investment, sales, and U.S. GDP all declined. One major reason, trade. 95% of executives citing White House trade policy as a moderate or serious risk. Business Roundtable CEO Josh Bolten and Chair J.P. Morgan's Jamie Dimon told reporters they'd advised the White House against tariffs and protectionist policies to no avail. 132 CEOs responded to the survey during the middle 2 weeks of May, when the White House was negotiating trade deals on NAFTA and with China, 2 fronts where friction has only increased in the weeks since. NEC Director Larry Kudlow said the U.S. may pursue separate deals with Canada and Mexico to replace the current trilateral deal. And a White House team in Beijing reportedly rebuffed an offer from China to buy $70 billion in U.S. energy and crops. Here's White House Press Secretary Sarah Sanders.
Our focus is on making sure we get good deals. I'm not here to make an announcement on what those look like, but he's going to continue pushing forward to make sure that he gets the best deal for American workers.
A campaign promise turning into a C-suite headache. For Nightly Business Report, I'm Kayla Tausche in Washington.
On Wall Street, as we mentioned, the NASDAQ closed at a fresh record, helped by shares of Netflix and Amazon. And while tech stocks powered ahead, the rest of the market struggled for gains. The Dow Jones Industrial Average fell 13 points to 24,799. The NASDAQ was up 31, and the S&P 500 gained 2 points, nearly 2. Now, some say the market is facing some pretty tough hurdles, and investors want to know if those hurdles can be cleared. So Mike Santoli takes a look.
Stock market bulls have plenty to be proud of after 2 months of hard-won progress, but they still have a bit more to prove. The S&P 500 index is up more than 6% since early April, grinding higher through a thicket of concerns, including trade tensions, rising interest rates, increasing inflation pressures, and fears of new regulation on tech giants. The slow climb has taken the index right up to a key threshold, the 2750 level, which has capped earlier rallies and where a nasty drop occurred in mid-March. This is a pretty natural area for the index to stall for a while as investors assess the underlying strength of the economy and the potential danger of trade policy moves and the Federal Reserve's rate-boosting campaign. The leadership of the market remains sturdy but selective. The Nasdaq has fully recovered from the correction that started in January and is back at a fresh all-time high. Small company stocks are also at a new record. These are positives for the bull case, but also a reminder that the drivers of the market's comeback have been narrow. Only three major sectors, tech, consumer discretionary, and energy, have outperformed the S&P 500 as a whole since the index was last at its current level nearly 3 months ago. The momentum in corporate profits has been powerful, the only question being how much growth will slow into 2019. The latest little push higher for stocks coincided with a pullback in oil prices and an easing back of bond yields on more soothing talk from the Fed and a flutter of global market turbulence that sent investors to the shelter of treasuries. And so as the market heads for the higher end of its choppy 2018 range and U.S. economic reports continue to show impressive strength, the next test for the bulls might come as those 10-year Treasury yields make another run above 3% and the Fed has its say next week. For Nightly Business Report, I'm Mike Santoli.
Time to take a look now at some of today's upgrades and downgrades. We begin with video game maker Take-Two Interactive, which was downgraded to market perform from outperform at BMO Capital Markets. The analyst there cites high expectations for an upcoming video game release, which it says could disappoint. Price target $116. The stock fell a fraction to $113.26. Meanwhile, First Solar shares were downgraded to neutral from buy at Bank of America. The analyst cites China's decision to suspend construction of new solar farms and to cut subsidies. Price target now $63, and that stock fell more than 5.5% today to $58.24.
And Bank of America is also making a call on Weight Watchers, rating the company a buy in new coverage. The analyst says the stock could rise another 20% from current levels. The price target is $95. The stock was up 8% today to $85.93. Shares of Occidental Petroleum were upgraded to buy from neutral at Citi. The analyst cites rising oil prices and a potential increase in production growth this year and next. The price target is $97. The stock closed up a fraction to $85.51.
The woman who created an iconic accessories empire that made her name synonymous with trendy handbags was found dead today in her Manhattan apartment. Designer Kate Spade was 55 years old. The cause of death is being reported as a suicide. Our Courtney Reagan now has more on her influence in the fashion world and the legacy she leaves behind.
The retail and fashion industries are mourning the loss of the designer known as Kate Spade. Spade launched her original eponymous handbag brand, Kate Spade, in 1993. 25 years ago, Kate Spade, the brand, began with 6 utilitarian handbags in a variety of colors. The brand was the first premium American handbag maker to use nylon for its base material. Kate Spade, her husband, and partners sold their majority stake to Neiman Marcus in 1999 for around $34 million, and the remaining stake in 2006 for $59 million. The Kate Spade brand has only grown. After changing ownership several times, Tapestry, which also owns Coach and Stuart Weitzman, bought the Kate Spade brand for nearly $2.5 billion last year, 11 years after Spade sold her remaining stake in the company she founded. The Kate Spade brand is still known today for its bright colors, feminine, whimsical aesthetic, and kitschy marketing. Kate Spade handbags, shoes, accessories, and clothing are sold around the world, bringing in more than $1 billion in annual sales. 2 years ago, she, along with her husband, Andy Spade, and the duo's original 2 other business partners, launched a new handbag and shoe brand, Frances Valentine. Around the same time, she changed her name to Kate Valentine. Frances Valentine also sells colorful shoes and handbags in department stores, boutiques, and online globally with that still familiar aesthetic that Kate Spade is known for, but with higher prices because of production in Italy and Spain. No official word from Frances Valentine on its future after the death of its founder. For Nightly Business Report, I'm Courtney Reagan.
Still ahead tonight on Nightly Business Report, America's most famous coffee chain embarks on a whole new chapter. As we reported last night, Starbucks executive chairman Howard Schultz is stepping down from the company he helped to build. Andrew Ross Sorkin broke the story and spoke to Mr. Schultz today about his next act.
We're here in Seattle where we sat down exclusively with Howard Schultz, the outgoing executive chair of Starbucks, who announced yesterday plans to step down from the company. He said, among other things that he may pursue in the future, public service, which of course has fueled speculation he could run for president in 2020. I asked him directly about that prospect.
There's a lot of things I can do as a private citizen other than run for the presidency of the United States. And let's just see what happens. I've got lots of things that I'm thinking about. I'm writing a book. It's only been 24 hours, but we've talked many times about how concerned I am about the country, our standing in the world, and I think there's many things I can do as a private citizen to advance the cause of the promise of the country.
While he said he has not made a decision yet about what he's going to do in the future, he did have a number of views on public policy.
Ronald Reagan in 1986 passed an immigration bill as a Republican president. So why can't we come together, move the ideology out, and do what's in the interest of American people? 70% of the American people want a good immigration policy. 70% of the American people want the kind of policy and legislation that takes the guns of war out of the American people's neighborhoods. I mean, this doesn't make sense to me.
Intriguingly, he had a fascinating take on how to think about today's economy and the stock market.
I think it's very wrong to use the stock market as a proxy for the U.S. economy. Interest rates are going up, and if I had to make a bet, and I'm not an economist, I don't believe that the stock market is going to continue to grow at the level it has between now and 2020. You're going to see a sea change. So, listen. The economy is strong. I give President Obama credit for that. I give President Trump some credit for that. But you also have systemic problems in the country, the likes of which we have not had in a long time.
Howard Schultz stepping off the Starbucks stage, but probably not stepping out of the headlines. I'm Andrew Ross Sorkin for Nightly Business Report in Seattle.
Well, Starbucks investors aren't too happy about the departure of Howard Schultz. The news sent shares of the stock lower in trading today. No doubt those same investors want to know what is next for Starbucks and how the company plans to overcome a number of challenges. Kate Rogers has that part of the story for us tonight.
It's a new era for Starbucks as founder and executive chairman Howard Schultz steps away from the brand he made into a household name over the past 30-plus years.
Please come in.
Now the focus is on Kevin Johnson, the company's CEO who has been at the helm since last year. The two men worked closely together, and analysts say the move presents an opening for Johnson to step out of Schultz's shadow.
I think this will be an opportunity for Kevin to really show himself, and that he doesn't necessarily need to rely strictly on Howard, and you know, frankly, can leverage the experience and the talents of the rest of the team.
Schultz's departure comes at a time when the competition for consumer dollars is fierce, as companies from Dunkin' Donuts to McDonald's are offering steeper values on coffee. Starbucks is focused on mobile as well as the consumer experience with its Reserve bars and roasteries in Seattle and Shanghai, with openings in Milan and New York City later this year. Starbucks is also in the midst of an ever-growing push into China, where it opens a new store once every 15 hours. A big challenge on Johnson's plate, increasing same-store sales in the U.S., which have been stagnant. Experts say Johnson needs to focus on innovation and technology.
I think that they need to iron out the mobile order platform and you know, make that and improve the experience in the stores. I think once they start to do that, I think that the Starbucks brand will kind of right the ship there.
Another bright spot in the leadership change, the appointment of Myron Ullman to executive chairman, who turned around struggling retailer JCPenney not once but twice in the past. For Nightly Business Report, I'm Kate Rogers.
Well, it has been reported by the New York Times that Howard Schultz may consider a run for the presidency in 2020, and Andrew Ross Sorkin addressed that earlier in our program. Well, today, Home Depot's co-founder and philanthropist Ken Langone said that if more people with business experience get involved in politics, it's a good thing.
Howard Schultz, Jamie Dimon, Mike Bloomberg, if we get those kind of people to say, hey, he won and I can win, we're going to dramatically open the pool of talent for people to become president. And by the way, that's good.
And that got us thinking about how business backgrounds could play a role in public office. Joining us to talk about that is Jeffrey Sonnenfeld, management professor and senior associate dean for leadership studies at Yale School of Management. Welcome back, Jeffrey. Nice to see you again.
Thanks, Sue. Good to see you. And hi, Bill.
Does it matter whether or not the business executive, and we've had many business executives transfer into government roles, does it matter whether they come from a private company or a public company? Does one give an advantage over the other?
That's a great question. You know, that was a fine point in Ross Sorkin's interview with Howard Schultz today, that he wanted to make that point without coming across like he is starting up a slugfest with the president. But he was suggesting that a mid-sized family business, as the Trump organization is, that has some global reach, doesn't, maybe a dozen countries, doesn't compare to the magnitude of what Starbucks has in 75 countries with some, 38,000 stores and things. They're almost as big in terms of number of stores as McDonald's. Right. It makes a big difference being accountable to bosses, to a board, to disparate constituencies, difficult bottom line criteria to meet and things. As a public CEO, it's a very different experience than being a private CEO. I don't want to diminish what Donald Trump has accomplished. I think as a CEO of a private business, it's pretty impressive. But what the scrutiny and everything that a public company has to go under, there's nothing like it. And none of the predecessors of our current CEOs have had as difficult a job as the current generation has.
There have been other successful businessmen in the White House, though, Jeff. You had Herbert Hoover, who was a mining magnate. He made his fortune in mining. H.W. Bush made his fortune in oil. That just names two of them. How are they different from other people who have been in the White House? How is their thinking different as business people?
Well, it's funny you mentioned those two, Bill. It's because Douglas Brinkley, the presidential historian, used those two in an article today to say, look, CEOs don't transfer into public office that well. Look how troubled those careers were, that Herbert Hoover, who by all accounts was a wonderful human being, was not a wonderful president. And W, who is, I think, also a wonderful human being, which probably won't be ranked as one of our finest presidents, George W. Bush. But, that for a historian, that was such a strange thing to pick. You could also say being a governor is bad because George W. Bush was a governor. Andrew Johnson was governor of Tennessee. Had a lot of Jimmy Carter was governor of Georgia.
Well, by the same token,
being a governor is bad. That's just silly.
George Washington was a very successful farmer. Which was a big business back in those days. So there's a
good for you. He was a
successful
farmer, and for that point, Harry Truman, he was a haberdasher. That's what my dad did. I think that was a pretty important position. But there are some that were very successful who never were senators and never were governors. Never heard really of an elected position like that exactly. Abraham Lincoln wasn't a governor, was never a senator. There are some very impressive models that way. But business leaders have done well. Michael Bloomberg, of course, as mayor, which is the next toughest job after being president, as mayor of New York City. He certainly did very well. And there are many business leaders who went into public service who were successful business leaders, but even more renowned for their legacies in public service, like Averell Harriman, who ran Dad's Railroad, the Union Pacific, and then Brown Brothers Harriman, and Chester Bowles, a great advertising exec. These people were fantastic diplomats.
Lots of examples, indeed. Jeff, thank you very much. Jeffrey Sonnenfeld with Yale's School of Management. Bill?
Elsewhere, we've got G3 Apparel posting a surprise profit, and that's where we begin tonight's market focus. The owner of Guess and DKNY said that there was stronger demand for many of its brands, and that helped sales and profits top estimates. The clothing company also raised its earnings guidance for the full year. Shares rose more than 10% today to $47.53. Navistar warned that its profit margins would be pressured this year by higher freight costs and an expected rise in sales for its less profitable trucks. The company says its auto parts business, its more profitable division, will likely see flat growth. And that news overshadowed an otherwise upbeat full-year outlook, and the stock fell a fraction to $38.35. Allergan is being urged by two of its biggest shareholders to split the roles of chairman and chief executive into separate roles. Hedge funds Appaloosa Management and Senator Investment Group are also calling on the drug maker to reconsider its acquisition strategy and to shake up management, all in an effort to give new life to Allergan stock, which today was up to $152.21.
The pharmaceutical company Mylan said the FDA has approved its drug that's intended to prevent infections in patients undergoing chemotherapy. Mylan said it plans to market the medication in the coming weeks. The shares finished up nearly 4% to $39.98. And shares of Twitter hit a 3-year high on news that it will join the S&P 500 index. The social media company is replacing seed maker Monsanto, which is merging with Bayer. The change will take effect before the market opens on Thursday. Twitter shares jumped 5% to finish the day at $39.80.
Coming up, why big tech is pouring big money into the race for San Francisco mayor.
Facebook and Google are being sued by Washington State's Attorney General. He says the companies failed to maintain information about political advertising. That information is required by law, and it includes data about buyers of political ads, the cost, how much they paid, and the candidate or ballot measure at issue. Washington candidates and political committees have reportedly spent about $5 million to advertise on those platforms in the past decade.
Some big tech companies are taking sides in the San Francisco mayoral race, and they have been pouring a lot of money into campaigns. That's because the stakes are high for a critical American industry. Aditi Roy has more.
San Francisco is about to elect a new mayor in a wide open race, and many voters have strong opinions about the issues important to them.
I understand the tech companies coming in, but the problem is that they have pushed out a lot of the old-time residents.
Two problems. One is mentally ill homeless people, and two is drug addicts.
There are 8 candidates running for mayor, but the top 3 contenders appear to be London Breed, Jane Kim, and Mark Leno. And the city's housing crisis seems to be front and center in the race. That's where tech leaders come in. Companies like Twitter, Airbnb, and Uber have all moved into San Francisco the last few years, and the infusion of highly paid engineers has been blamed for the city's housing crisis and rise of homelessness. Many tech leaders are looking for solutions to these problems. While all the candidates address those topics, Breed, the frontrunner, appears to have the most aggressive plan for building more homes. She's pledged to create at least 5,000 units of housing per year and has backed removing homeless people from the streets. Medium CEO Evan Williams has donated $100,500 to committees supporting her, and venture capitalist Ron Conway and his wife Gail have also contributed. Jane Kim is proposing a $1 billion bond to stabilize the housing market and wants to make shelters more accessible and deploy mobile showers for homeless people. Her tech backers include the CEOs of startup Automatic and Zendesk. They've donated $100,000 and $50,000 respectively to committees supporting Kim. The tech footprint has expanded in recent years, in part because of the policies of late Mayor Ed Lee, whose sudden death in December sparked today's election. Voters we talked to seem divided on tech's influence in San Francisco.
Without the tech companies, you don't have all this fabulous infrastructure.
Even though many high-profile tech leaders are supporting Breed, it's unclear whether she'll follow in Lee's footsteps in embracing tech companies. In 2016, she even introduced legislation that would have regulated Airbnb. For Nightly Business Report, I'm Aditi Roy, San Francisco.
The first state in the union today became the first state outside of Nevada to take wagers on sports betting. And this comes just a few weeks after the Supreme Court lifted the federal ban. Betting is taking place at 3 Delaware casinos and will offer wagering on baseball, football, basketball, soccer, golf, and auto racing. Other states are expected to follow.
Finally tonight, the latest list of the world's highest paid athletes is out. According to Forbes, Floyd Mayweather is at the top spot again. This is the 4th time in the last 7 years. Total earnings last year, $285 million. Number 2, soccer player Lionel Messi, payday of $111 million. Rounding out the top 3, fellow soccer player Cristiano Ronaldo at $108 million. By the way, the 100 highest paid athletes earned a collective $3.8 billion during the past 12 months. That is up more than 20% from a year ago.
That's it for us tonight. Have a great night.
See you tomorrow.